Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, July 31, 2024. We are looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? We had Kabuki Theater, the FOMC interest rate announcement, Jerry's presser. And what we had was a pop right into the 20-period moving average on the daily chart. And this didn't start with the FOMC this afternoon. This started with the overnight crew leading to a big gap higher open this morning. So it was yesterday's decline that was the fake out operation setting up for the conveyor belt of pies in the face today back in the upward direction. Now, we talked about a couple of important things. One was if they were going up, what would be that place that they had to clear for the bull case to get going? And that was this breakdown candle high, 549.17. They got above there today. They stayed above there today. And you'll see when we go to the intraday stuff from inside the numbers, you'll see that that number was important today. What's also interesting is you look at the other side. There's a gap up here. And the gap is at 553.78. Today's high happens to be 553.50. So they missed the gap by what? 28 cents. There's no accidents or coincidences. It's on purpose they missed the gap. If they wanted to fill the gap today, they would have filled the gap. Traditionally, what happened was they're going to, at least on the first run over, screw two factions of traders. Those looking to exit the ride up at the gap, they don't get their exit. They pull up short, they pull back. The long traders have to exit. They start chasing the market back down. That's one thing. The second is those sitting at the gap waiting to short the tape, they don't get the opportunity. They pull back before they get to the gap, leaving the short traders sitting at the altar, screwing two factions of traders. They do this all the time, over and over and over again. All we have to know for now is above 549.17 is the bull case. Let's say they go higher than the gap. Let's say the short-term destination is not the gap, yet they're going to punch through and go to the next number. What is the next number? This is where you get out your sticky notes and your pens or pencils and you write down the next number. 556.95. Put it on a 3M sticky note. Obviously, they have to get above the gap over here that happens to be at 553.78 first. And all that remains possible if they're above 549.17. This breakdown candle high. This whole thing is about the Fed. It's about interest rates. It's about waiting for the Fed to lower interest rates. Where are they going to lower interest rates? When are they going to lower interest rates? How much are they going to lower interest rates? How many times this year are they going to lower interest rates? All that stuff. And this is nothing more than a shell game. It's also known as a charade. The Treasury has to borrow money. They can't borrow money with high interest rates. For a short period of time, yeah. Is it sustainable? No. Interest rates have to come down for them to borrow new money at lower rates. Otherwise, the whole thing gets spiraled out of control. The Fed needed higher interest rates to be able to save the day by lowering interest rates later. It's all part of the same charade. There will be another leg down, enabling the Fed to step in a little bit later with the lower interest rate story, more liquidity, pump the markets with liquidity, save the day. That's the main job of the Fed, not employment and all that other nonsense they pretend is their job. That's bullshit. Their job is to save the day when markets are going down. The tail wags the dog. The Fed is the dog. The tail is the market. Nothing ever changes. From the get-go today, even in the overnight session, you wake up this morning, big gap higher open. It's a hop on the bus Gus day. Buy him up, Billy. type of positive situation. Traders buying puts yesterday afternoon thinking you're going to get a gap lower or you're going to get a debacle after the Fed. What do they get? They get a pie in the face, lemon meringue. Lazy swing trader automagical algo system. Profit target hit today in Exelon EXC. Entry 35.49, exit 37.39. This is a first profit target, is now a risk-free, emotionless trade. Lazy swing trader, automagical algo system. Base hits put you in the Hall of Fame. What was going on today inside the numbers? What was the commentary all about? Well, it was obvious the overnight crew got an advance copy of the FOMC decision and Jerry's presser notes. They got something. Wake up to a pre-market rocket ride. No doubt, conveyor belt of pies in the face scheduled to be issued on the shorts. So let's pay attention to some of the numbers. Gets interesting. The same spot from yesterday as our pivot again today. We're talking 547.05, and if above, the door opens for 547.95, and then 549. Sound familiar? We just talked about the 549.17. That's the same place. Look, above 549.20, I'm just rounding here, puts them in no man's land up to the big fat or semi-fat round number of 550. So we use these numbers depending on whether they're intraday off a long-term chart. All charts act and react the same way, and we use the same methodology, if you will, to find the important places. Now let's backtrack a second and pick out some numbers. 547.05, 547.95. There's your 547.95. They didn't really get much lower. They didn't go down to the 547.05, but 547.95, give or take, was in fact support this morning. Above 549.20 on candle closes puts them in no man's land. Did we have buyers in the live trading room at 547.95? And the answer is yes, we did. And then, by the way, by the by, look over here. This is another retest, right? This is a retest around the FOMC announcement a little before. This is a retest of that breakdown candle high, 549.17. And then right into the end of the day, one more time. Retest of the same spot. Are they going to close above or are they not going to close above? That was the decision point today on these retests. These places are important. Yeah, the video got skewed for a minute. There was two retests. You couldn't see the second one. I didn't realize I was off screen talking about it. But this is that retest of 549.17. Twice this afternoon, once before the FOMC announcement and once after. The market knows, Mrs. Market knows about important places, doesn't she? Yeah. Pause the video, read the notes, go back to the chart, and double check the work. Service announcement, inside the numbers, live room will be moderated by Jordan this Friday. Inside the numbers will be closed this Friday. I have something to do, unavoidable. We move on. 8:30 a.m. data release, 549, all that stuff. The next place is 550. The next place over 550 is 551. That was an important low. It actually was 551.02. We had all kinds of stuff. We had a target of 551.02 right there in the notes. And I'm going to show you exactly what that was and why it was a target. It was a target and overhead resistance. Discuss this with traders in real time in the live room. You come back over here and you see where the low on this day, on the 22nd of July, the low on that day was made at that price. The price was exactly 551.02. The market thought that price was important. First time back to that price, guess what? It's A, magnetic, and B, at least from an intraday perspective, overhead resistance. That's what happened. You drill it down to a 5-minute chart, and there's your 551.02. First hit, overhead resistance, pull back. Did we have traders that tried to short that? Yes, we did. They were privy to that information ahead of time, not after the fact. Inside the numbers live trading room situation. Pause the video, read the notes, go back to the chart, and double check the work. It's all in here. The 449, the 551, the whatever numbers we needed is in here for the taking each and every day. The support, the resistance, where the trades are, everything you need to know, everything you need to be successful during the trading day in the S&P, ETFs, options, futures, whatever you're trading. Same story. Stocks on the move today. We're going to take a look at Pins, Marriott, Bungie, and CVS. Microsoft didn't hit its entry objective. It traded away around the opening bell. It's off the board. We'll take a look at the other four. Here's your zone in Pins. They came up short of the first number, 8 time off the clock. Came into it. It's not the same second time around. We want them on the first run down. This changes the scope of the trade, activates the second number. They hit the second number, bounced back above the first number, technically gave you the deal, came back down, floundered around. The numbers work. That's the bottom line. The manner in which. There's your zone in Marriott. You could see the first number directly into it in the first 15 minutes of the day. They found support at 225.50, had a bounce back in the other direction, gave you the trade up about $3.5, $4, came back down later, but that is the trade. The numbers work. How about Bungie, BG, opened up the day, opening print 104.69. That technically takes the first number off the board. Second number's activated, came into the second number, bounced back to the first. The numbers work. Bungie. CVS, $60.75 was the number. They opened above it, came into it, spiked it at a rocket right away. Again, the numbers work. The process works. Open below a number, it's off the board. Next number activated. The manner in which matters. We paint by the numbers. If you follow the rules, you find success with the numbers. What's going on over in Camp IWM? Made a new high, big tail candle, end of the month. Right, by the way, we forgot about end of the month. Monthly candle in the SPX. Could make a case, it's what I call in my course, Lazy E-mini Trader, a pseudo doji candle. Here's the spiders, same thing. Back to the IWM, big tail candle today, made a new high. Was not able to sustain price above the high, put in a tail and a doji-ish situation above the high from a couple of weeks ago on close at the end of a week is where that tail is wrong. Technically speaking, by the book. The trend is your friend. The trend is up. She's above all the moving averages. Big volume day today in comparison to the last several days. Interesting information. If it was breakout volume, she would have finished near the highs. Now I'm going to turn to the end of the week to find out what happens. By Friday's close is going to tell some kind of big tail. What about the folks down at the transportation department? Breaking out once again above the channel, above the top trend line. You go to the weekly chart, where are they going to close the week? Next couple of days will be extremely important. Closing above is a breakout situation. It opens the door, if they continue to push up, to these highs here. These are the next important pivots up near 16.7 and change, give or take. Above all the moving averages. Trend is your friend. Monthly chart. Staying above all the moving averages. The trend is your friend. Monthly chart. Breakdown candle high. Coinciding in the neighborhood of where they are right now. Interesting information. They did not close above that monthly breakdown candle high from April. The high was 16,169 and change. The closing print of the month of July, it's closed right now. Closing print 16,083 and change. They did not close above that high, but they tried. They were above that high. They just didn't close above that high. Interesting. The Q people, up 3% today. Pretty healthy up day. Spiders were up 1.6%, but the Qs were up almost 3%. That ain't nothing. Wait till you see smash mouth. What the Qs did was backtest or almost backtest the 50-period moving average, but also this breakdown candle high. They didn't even get to this high. Remember where the S&P is. S&P, and we'll get rid of this, S&P or SPY was above its corresponding breakdown candle high all day long. You go over to the Qs, and they didn't really make it there, so there's relative weakness from where the chart positioning is between the Qs and the S&P. I think that's valuable information. I think that's interesting information. I think you need to write that down. I think if the Qs can't recapture this breakdown candle high, that's very telling of one thing. And if they can and do recapture that breakdown candle high, that's very telling of something else. So that's an important spot. I'm watching that now day by day by day. The financials, XLF, not participating today. At the end of the day, down 11 cents, not a big decline, but not participating in the upside. Again, financials we know are very sensitive to the kabuki theater, the FOMC announcement, Jerry's presser, all that stuff. Not going to make a federal case out of it. We'll call the financials flat, above all the moving averages. Trend is your friend anyway. Then you flip over to Smashmouth, up 17.5 bucks, over 7, almost 8% today. Just an absolute rocket ride. But they too were in a different position on the charts. They were giving up the 100-period moving average on the daily chart. You flip over to the weekly, teetering on giving up the 20-period moving average on the weekly chart. Will they be saved by the end of the week, or will they decline into the end of the week? Remains to be seen. That's another area I'm watching. That is a breakout area, 239.15. They already tested it last week, but if they get below and close below this week, and that puts them below the 20-week moving average, that's going to be another very telling sign. There's a lot of stuff going on around the horn. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.